Hello guys, the United States stocks paired gains and Treasuries rallied, while the dollar weakened by the most since March after the Federal Reserve struck a dovish tone in its latest policy statements. The S&P 500 pushed within striking distance of an all-time high before retreating. The 2-year note yield slipped to 1.79% after the central bank kept rates steady and signaled a greater willingness to lower them this year. The moves were somewhat muted after markets had been pricing in such a turn for the past few weeks. Crude oil declined. We are definitely hearing a decidedly more dovish Fed, and while you could point a finger at the pressure from the White House, it's key to remember that the Fed's focus has always been on two things and two things only: jobs and inflation, said Mike Lowengartz, Vice President of Investment Strategy at the E-Trade Financial. Delayed reaction: 2-year bond yield aims at cracking 1.8 level. Chairman Jerome Powell and the college dropped a reference in their statement to being patient on borrowing costs and forecast a large miss on their 2% inflation target this year. Policymakers kept their key rates in a range of 2.25% to 2.5%, as many of the world's biggest central banks signal a shift to easier policy. Traders are waiting that against trade war fears signs of cooling global growth. United States President Donald Trump said Tuesday that he had a very good phone conversation with Chinese President Xi Jinping. The two leaders will hold an extended meeting at the G20 summit on June the 28th to 29th in Osaka. Stocks. The S&P 500 index rose 0.1% as of 2:28 p.m. New York time, while the Nasdaq Composite Index gained 0.1% in the Dow Jones Industrial Average, increasing less than 0.1%. The Stocks Europe 600 was little changed. The MSCI Emerging Market Index climbed by 1.6%, the biggest increase in more than a week. The MSCI Asia Pacific Index surged 2%, the highest in 6 weeks, on the largest jump on more than 5 months. Currencies. The Bloomberg Dollar Spot Index declined 0.4%. The euro rose to 0.2%. to $1.1206, while the yen weakened less than $0.1 at the 108.35 per dollar. The British pound rose 0.6% to $1,2622, the biggest rise in more than a week. The MSCI Emerging Markets Currency Index rose 0.5%. Bonds. The yield in 10-year Treasuries fell 2 basis points to 2.05%. Germany's 10-year yield climbed 3 basis points to minus 0.29%. Commodities. West Texas Intermediate fell 0.6% to 53.57 a barrel. Gold rose 0.3% to $1,350 an ounce. The Bloomberg Commodity Index dropped $0.5.
Does the American central bank have time to wait?
I mean, the U.S. economy is doing quite well. I mean, unemployment is at 50-year record lows. And so there is a good argument to be made to continue to be data dependent and to see how the risks play out. I think at this point what we are seeing is central banks signaling a willingness to step in maybe sooner than we thought. But of course, when actions actually take place, I mean, that's going to be dependent on the actual numbers that come in.